You're watching Mining News headlines on mining.com. I'm David Murrigan. China has suspended rare earth export controls on 28 U.S. entities for 90 days. The move is part of a broader trade truce hailed by U.S. President Donald Trump as a total reset. Beijing is now allowing export license applications for restricted military use goods. It also paused a trade and investment ban on 17 American firms. Markets reacted positively, with U.S. stocks and the dollar surging. China first imposed the curbs in April amid rising tariff tensions. Gold has dropped below the $3,200 mark an ounce, its lowest level in over a month, as easing U.S.-China trade tensions shift in investor sentiment. With bullion now down 9% from its recent peak, some are questioning whether the safe haven rally is losing steam or simply taking a breather. Nikos Tsabouras, senior market analyst at Tradew.com, explains.
Further negotiations are needed in these discussions for a comprehensive, long-lasting deal, not just with China, but with UK and others, which can actually be more complex. And tariffs are here to stay. We already have higher tariffs in any case. And this creates an environment where trade uncertainty is unlikely to go away, and an environment where gold's safe haven appeal can be rekindled and keep the door open to new record highs in terms of prices.
MP Materials in the US has signed a deal with Saudi Arabia to create a rare earths supply chain from mine to magnet. The agreement was announced at the US-Saudi Investment Forum and marks a major step for the kingdom's Vision 2030 push to diversify its economy. Saudi miner Ma'aden and MP will collaborate across exploration, refining, and final magnet production. Ma'aden CEO says the move supports the kingdom's goal of making mining its third economic pillar. MP Material CEO called the partnership critical for shifting global supply chains away from China. The move follows MP's recent decision to stop shipping rare earths to China after new restrictions from Beijing. The Democratic Republic of Congo may tighten cobalt export limits once its 4-month ban ends. High global stockpiles have kept prices low despite recent declines. Regulator Patrick Luabeya says stricter curbs are inevitable to restore market balance. Industry consultations are planned for June. Mines Minister Kizitso Pakabomba confirmed talks are underway with major producers, including Glencore and ERG. Congo is also eyeing a supply pact with Indonesia to stabilize global pricing. At the same time, a new report from the Cobalt Institute projects demand will nearly double to 400,000 tons by the early 2030s. The surge is being driven by explosive growth of electric vehicles. Battery applications made up 76% of cobalt use in 2024, with EVs alone responsible for 43%. That share is expected to hit 57% by 2030, putting strain on global supplies. Growth in other sectors, including mobile devices and industrial alloys, is expected to be modest in comparison. And that's where we leave your news headlines for now. Bye-bye.